Hey there, welcome back to my channel, it's me the Mind Injector. In this video we've got some mind-blowing insights into the world of NIO. Today we are diving deep into NIO's recent stock surge, the ripple effects from JD.com and the intricate dance of market forces. But before we get into the nitty-gritty, I've got a question for you. What if I told you that a single company's performance could be a crystal ball for an entire industry? Intrigued? Well, you should be, because that's exactly what we are about to unravel. But first, let's hit the ground running with the headline grabber. NIO shares are soaring high, up over 10% this week. Now, that's not just a blip on the financial radar, it's a surge that demands our attention. But here's the kicker, it's not just NIO. This surge is in symphony with JD.com, and the plot thickens when we explore why. JD.com recently danced with its third quarter results. Net product revenue saw a slight dip, down 0.9% to $26.77 billion, while net service revenues did a happy dance, increasing by 12.7% to $7.18 billion. What about JD retail revenue? Well, that stayed in its lane, remaining flat at $29.07 billion. But why does this matter to NIO investors? Ah, my friend, that's where the financial plot twists come into play. Investors often play detective, looking at one company's performance to predict how others might be faring in the same economic conditions or market environment. Think of it as reading the tea leaves of the stock market. Now, JD.com's performance could be the canary in the coal mine, signaling increased consumer spending or a robust online retail sector in China. Why does this positive outlook matter to NIO? Picture this. Strong consumer spending could translate to higher demand for products like electric cars. Yes, you heard it right. The surge in JD.com's fortunes might just mean a boost for companies in related industries, especially electric vehicle manufacturers like NIO. It's like a financial domino effect, and NIO could be in the spotlight. But let's not stop there. Let's dive into the heavyweight players in the financial ring, the institutional investors. The Bank of New York Mellon, not one to sit on the sidelines, increased its holdings in NIO during the second quarter. How much, you ask? A cool 2%, snagging an additional 32,521 shares. Now, that's confidence in action. And they are not alone in the confidence game. Wealth Plan Partners, Alpha Market Advisors, Point72 Asset Management, etc., they've all thrown their hats into the NIO ring. Collectively, institutional investors own a hefty 42.32% of the company's stock. Now, let's talk about the analysts. These financial soothsayers have been busy with their pens upgrading and downgrading trying to decipher NIO's fate. Sanford Bernstein dropped the price target on NIO from $9 to $8, giving it a market perform rating. On the flip side, UBS Group raised their price objective on NIO from $13 to $15, slapping it with a neutral rating. And it doesn't end there. Citigroup, the financial wizards, raised their price objective on NIO from $13.90 to $19.20, painting an optimistic picture. But hold your horses, because CLSA threw a curveball, dropping their price objective from $18 to $14. In the realm of ratings, 7 equities research analysts have given NIO a hold rating, while 3 have issued a buy rating. According to the data, NIO has an average rating of hold and a consensus price target of $12.68. Now, that's a mixed bag, and it keeps things interesting. Let's talk numbers. The company has had its share of ups and downs, with a 52-week low of $7 and a high of $16.18. The market cap stands at a whopping $12.41 billion. But what about the financial health? The PE ratio is a fascinating -4.01, and the beta, indicating volatility, is at 2.11. But wait, there's more. The debt-to-equity ratio is a respectable 0.45, suggesting a balanced financial structure. Quick ratio stands at 0.82, and the current ratio at 1. These are numbers that financial aficionados love to dissect. Let's not forget the earnings dance. NIO last announced its quarterly earnings data on August 29th. Brace yourself for this one. Their earnings per share for the quarter were missing the consensus estimate by a dramatic $0.32. That's not a small miss, but hold your judgment. NIO had a negative return on equity of 94.92% and a negative net margin of 42.97%. The revenue for the quarter was $8.77 billion, a 14.8% drop compared to the same quarter last year. Now, as we step into the future, analysts are trying to predict NIO's next move. The consensus estimate is that NIO will post 1.79 EPS for the current fiscal year. It's a complex dance of numbers, and NIO is in the spotlight. Now, let's take a step back and look at the bigger picture. NIO is not just a player in the electric vehicle market, it's a conductor in the symphony of future technologies. William Li, NIO's founder, recently appointed Lei Jun, the founder of Xiaomi, as a non-executive director. This move raises intriguing questions about NIO's future strategy. The appointment of Lei Jun could mean that NIO is gearing up to monetize its technology. We're not just talking about electric vehicles. We're talking about self-driving software and smartphone technology. It's a bold move, and it's got the market buzzing with anticipation. Now, let's zoom in on a critical challenge for electric vehicles: batteries. Today's batteries have low energy density, meaning EVs have limited range. How do you solve this puzzle? Well, car makers have been adding electronics and implementing self-driving technology. But true autonomous driving is still largely in development. In 2023, NIO shook things up by launching its own smartphone and introducing self-driving features. Picture this: your car delivering itself to you. It's not science fiction, it's NIO's reality. But here's the twist: this technological leap didn't give the stock the boost you might expect. NIO's stock is down 24% year to date. Before we get into the exciting details, let me introduce you to Mumo Financial. If you open a brokerage account with Mumo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. NIO is not just navigating technological challenges, it's facing headwinds in the market. The domestic market is a tough nut to crack, and there's resistance to NIO's export drive to Europe. The company has been bleeding money, losing $35,000 on each car it makes. That's not pocket change. And to tackle this financial storm, NIO recently announced it would cut 10% of its workforce. It's a tough call, but it's one they're making to weather the storm. And here's a curveball. NIO is still undecided on entering the US market in 2025. To make that move, they'll need to support their battery swap technology. This technology is their ace in the sleeve, maintaining their vehicle driving ranges in a matter of minutes. It's ambitious, and it's a pivotal decision on the horizon. Now, let's talk about the options theater. As of November 14, 2023, significant investors are playing a game of chess with NIO's options. Out of the 15 detected trades, 40% opened trades with bullish expectations, while the remaining 60% went bearish. The total amount invested in puts was $152,113, while calls accounted for a hefty $468,450. These savvy investors are eyeing a price range of $2.5 to $30 for NIO over the past 3 months. In today's trading context, the average open interest for NIO options stands at 9,366, with the total volume reaching 11,439. It's like a financial chessboard, and these moves are not to be taken lightly. In the intricate world of options, there's a mix of sentiments: bullish, bearish, and neutral. The options detected include notable call sweeps with both bullish and bearish sentiments, along with put sweeps carrying bullish vibes. Each option tells a story, from sentiment to expiration dates, strike prices, total trade prices, open interest, and volume. NIO, standing tall in the electric vehicle market, is drawing attention in the options theater. The company's focus on design, development, joint manufacturing and sale of premium smart electric vehicles has positioned it as a key player in the ever-evolving technology landscape. In summary, the options trading activity surrounding NIO reflects the dynamic mix of bullish and bearish sentiment. It's a treasure trove for investors and traders navigating the financial maze. As we wrap up this financial saga, let's take a moment to reflect. NIO is not just a company. It's a narrative unfolding in the pages of financial history. The surge in its stock, the intricate dance of market forces, the challenges it faces, and the bold moves it's making, it's all part of the financial theater. So, keep an eye on NIO because this story is far from over. The stock market, like any great play, is with twists and turns. Will NIO take center stage, or will it be a supporting character in the financial epic? Only time will tell. This is it for this video, guys. Thanks for watching and please make sure to subscribe, like and leave a comment down below.